Hi, today we're going to present Ferrari's annual report on 2020. Ferrari is among the world's leading luxury brands focused on design, engineering, production, and the sales of the world's most recognizable luxury performance sports car. The company was founded by Enzo Ferrari in 1939 out of the Alfa Romeo race division as Auto Avio Costruzioni, and the company built its first car in 1940. In terms of activity, production takes place in Maranello, Italy, while the selling activity takes place in over 60 markets worldwide. Moreover, they design, source, and sell Ferrari-branded products through a network of 18 Ferrari-owned stores and 18 franchise stores.
Here, we can see a snapshot of the first part of the balance sheet. It includes the company's assets, and they're organized from less liquid at the top to most liquid at the bottom. Assets can be separated between non-current and current assets. Some categories we want to highlight inside non-current assets are 979 million in form of intangible assets. Out of those, 630 million come from externally acquired development costs, meaning they are purchased from third parties. 308 million are internally generated, and the other 40 million come from patents and other intangible assets. 1,226 million come from plants, property, and equipment. We think this makes sense since Ferrari needs a lot of it to manufacture their products. In the category of current assets, we think it's important to highlight Ferrari's 460 million worth of inventories. Out of those, 269 million are finished goods, 94 million come from semi-finished goods, and 96 million come from raw materials. Then we want to highlight the 184 million worth of trade receivables. Most of it comes from dealers, since client financing is represented as part of receivables from financial activities, which amounts to 939 million in total. To conclude, Ferrari counts with 1,362 million in form of cash and cash equivalents.
Regarding net equity and liabilities, the group does not allow the separation of financial liabilities as current or non-current based on their maturity date, because it would not facilitate meaningful comparison with the financial assets. Therefore, based on the notes, we were able to divide each category, resulting in a sum of almost 2,128 millions of euro non-current liabilities and 1,281 millions of euro of current liabilities, excluding other financial liabilities which are not classified in the notes. The most important figure in the liability sides are the non-current debts, worth 1,835 millions of euro. In addition, current liabilities value is lower than the current assets one, inducing that the company is able to fulfill all previous obligations. Total equity consists of equity attributable to owners of the parent and non-controlling interest, valuing 1,789 millions of euros.
So, to the consolidated income statement. The group generates revenues from the sales of cars, spare parts and engines, as well as from sponsorships, commercial, and brand activities. In 2020, Ferrari shipped 9,119 cars and recorded total net revenues of approximately 3.5 billion, split between the income items. The global economic conditions caused by the pandemic have clearly affected the company's 2020 revenues adversely, from temporary suspension of production and shipments to changes to the calendar and format of the 2020 Formula One season.
To the consolidated income statement. The most relevant expense related to the cost of sales, which accounted for 1.69 billion euros, which is almost half of the net revenues. These costs mainly consist of components, materials, labor related to manufacturing and distribution of cars and spare parts. A total cost of 707 million came from Ferrari's extensive research and development. Lastly, the selling, general and administrative costs were equal to 336 million at the end of 2020, consisting mainly of costs for sales personnel, marketing and events, and retail stores. Net profit. Ferrari's net profit of 2020 amounted to 609 million euros. In general, Ferrari's low volume strategy may limit potential profit, and if volumes increase, their brand exclusively may be eroded. Similarly, the small number of car models they produce and sell may result in greater volatility in their financial reports, since the consequences of failing new model would greatly weigh on their total amounts.